All right, guys, welcome and thank you very much for joining me in this video. So in this video, guys, I'm going to share with you tips on how to trade successfully, right? I'm going to share with you things that I wish I knew when I first started trading. Now I know. I've gone through a lot of things. I've gotten beat up when I first started trading. Everybody's going to get beat up, right? Don't feel bad if you get beat up in the market. In fact, the greatest investors in the stock market took huge hits before they became really great. All right, they took hits. Grab some water because this video is probably going to be long. And also, guys, make sure to hit the like button, subscribe, hit the notification bell. Do it for me because I'm holding this freaking microphone. I'll be holding it for a while in this video. The boom arm thing, whatever you call it, that I ordered for it still hasn't arrived, and this is going to suck holding it for so long for you guys, but I'll do it for you guys. All right, so I'm doing this for you guys. All right, so please hit the notification bell, hit the like button. Here we go. All right, so if you're a beginner in the stock market, guys, or even if you've been trading for a while now, right, especially for beginners, the stock market right now is the greatest opportunity, guys. It is. You're entering at the best opportunities because you're entering when the market is down, when there are discounts. Think about going into a store and finding your favorite brands at a discount, right? Don't you like that? But you got to be very careful. All right, you guys want to be successful, you want to make money, listen to me, especially if you're a beginner. Well, the first tip, an obvious tip, is to buy the right investments. But that's easier said than done. What does that mean? It's pretty much broad in general, buy the right investments. Guys, in order to buy the right investments, you better know what you're doing. Most people, most retail investors don't know what they're doing. And they will never have in their they will never have the money, they will never have the resources, they will never have the knowledge, and they will never have the time that the investment firms have, that the financial advisors have, the work for investment firms, that the people who manage funds for investment firms have. We don't have that time, we don't have the resources, we don't have the money, we don't have the tools, right? So in order to pick the right investment, it's hard. People think that they can come into the stock market and they know what they're doing, right? All these people are going to get beat up. They're going to get crushed. They're going to get destroyed. Picking stocks is not easy. Looking at the past performance of a stock is easy. You can pull up the chart and say, wow, past 5 years has been doing awesome. Past 1 year has been doing awesome. But being able to foresee ahead of time which company will be, higher 1 year from now, 5 years from now, which would be the best, because that's how you build wealth. That's extremely hard because during that 5 years, we have things that will pop that you can never ever think of in your life. COVID, wars, politics, all sorts of things. It can be really scary, and a lot of people are losing money in the stock market, and they're down, and their portfolio is red because they thought that they can handle it. We all come from different backgrounds, different ages, different situations in our life, financial or non-financial. So picking stocks, individual stocks, I think is a very bad move, but there is a universal formula that can work for everyone. Now, guys, to be honest, if I was 90 years old, man, if I was 90, I'd take all the loans out in the world, any loan I can get, man, and just play the stock market like there's no tomorrow. Day trade like there's no tomorrow. Because, I mean, think about it. If you're 90 years old, how much of a tomorrow do you have anyways? Okay, that's not financial advice. That was a joke, right? Don't take that as financial advice, guys. That was a joke. All right, if you're 90 years old, don't do it. Anyways, so, all right, guys. So we covered that. Buying the right investment is what you should do, but it's extremely hard. So how do we do it? We go through funds. We go through exchange-traded funds. I know some people... Now, if you don't know what exchange-traded funds, let me just get to that point first. If you don't know what exchange-traded funds, guys, is, it's basically a fund that holds certain holdings. This fund is managed by other people. It's managed by professionals, right? So it may hold 10 companies, 100 companies, or it may hold other funds within a fund. You're basically giving your money to professionals and you're telling them, here, take my money and you invest them in that strategy that you got going, and I trust that you will do better than I'll do on my own. Most funds do a lot better than you'll ever do. Take a symbol ITOT. Look at that up. Just look that up. Look at the max lifetime chart. ITOT just goes straight up, right? That's all it does. There's the ups and downs, but obviously if you're new to the stock market, please know that no stock market and no stock, nothing goes on a straight line up. right? So the return that ITOT has given to its shareholders for years has been stunning, has been amazing. You know, obviously SPY is another example. I know that you will look at your broker app on a daily basis. You will look at Reddit on a daily basis, maybe. You will look at Twitter. You will look at stock tweets, which is just, please, I would suggest you don't. But especially the comment section, I mean, it's horrible. Oh my God. It's a soap opera full of drama and stupidity, in my opinion. But if you look at all of that stuff on a daily basis, you're going to see people talking every single day. This penny stock just went up this much. Guys, get in, you know, load the boat. You know, this is 20 cents. We're going to 30 cents. This and this and this and this and this and that. I'm going to tell you right now. I'm going to tell you, and you might not want to listen to me, but you're going to realize, you're going to remember me. If you start getting into and chasing penny stocks, you will go nowhere. You can do it for 1 year. You can do it for 2 years. You can do it for 5 years. I don't care how long you chase penny stocks. When it's all said and done, you will start at point A and make a big circles and get back to point A. You're not going to go anywhere. Nowhere. Zero. You're literally never going to go anywhere. Only the top 5% of retail investors, and maybe even less than that, will succeed over time with trading penny stocks. If you want to build wealth, wealth is built with time. Avoid every single voice out there that's telling you that you need to get into the next penny stock because it's going to go up 100%. There will be every single day 1, 2, 3 penny stocks that explode. That happens every single day. But those are pump and dumps. Pump and dumps means that it pumps and it dumps at some point. You will get caught at the dump more often than the profit part of the pump and dump. And also the pump and dumps are based on pretty much nothing most of the times. That means you will never know ahead of time when they will start pumping. Now, diversification. Guys, diversify into exchange traded funds as a beginner. Load the boat on ETFs. Load the boat on dividend paying ETFs. If you're going to do it the right way. Dividend paying ETFs. And especially if you're young. Don't make that mistake of being young and chasing cryptos or penny stocks. Why waste your youth and not set yourself up to be 30, 35 years old and have an income that pretty much can even get you to be independent, right? So start chasing funds, dividend paying funds. AMZY is a dividend paying ETF. I'm not going to get into the full details of what it is, but it's basically an exchange traded fund that does options on the Amazon stock. For me, that's one of the best dividend paying ETFs out there because it does options on a company that's, you know it's going to do well. Amazon is going to be around. Amazon is going to be a powerful stock. Amazon stock is going to do, it's going to be fine. So to do options on the Amazon stock, instead of me doing it so I don't screw myself up, I'll let YieldMax do it for me through AMZY, and I'll get great dividends. The most recent dividend that they paid was 63 cents, and he pays it on a monthly basis. Every single month, you get an average of about 60, 63, maybe 70 cents per share. But don't load the boat on one ETF, on one dividend paying, no matter how good it may seem. Right? Don't do that. Diversify, because the stock market is unpredictable. There's all sorts of things that can happen in the future. Here's an example of why a diversified portfolio is going to make you rich, is going to build you wealth. And you know what? In the times that we live in now, it's not like it used to be long ago. It used to be that, dividend paying stocks or dividend ETFs were paying so little. You had to put so much money into it to actually see something worthwhile and all that. Now we're living at times where we have all these different option strategy ETFs, which of course I'm saying diversified, not, don't make your whole dividend portfolio option strategy ETFs, but I'm just giving you an example of how these things can help boost your diversified dividend portfolio. So put a little bit of AMZY, put a little bit of FDVV, put a little bit of JPI, if I remember. JP Morgan, it's also an option strategy ETF, but it's a very good one. There's different ETFs. When I'm done with the video, I'll remember all these things and I'll put them in the description. You can watch and you can see a list of really good dividend ETFs that I think are good. And so once you have a basket, once you have a portfolio, guys, of diversified 10, 20, 30 diversified ETFs, dividend paying ETFs, start accumulating these things. Start on a monthly basis, every month. Okay, how much money do I have that I don't need in my life? These are money that, you know what, I took care of everything in my life, my personal life, my kids or expenses or whatever. Now I have this money that I want to invest. All right, every single month, take that money and pour it into those dividend ETFs. Again, next month, get the dividends, pour them back in, get the extra money you want to put, start buying more of that. Every month, do that. Do it for 1, do it for 5, do it for 7 years. Guys, I guarantee you it will change your life and you won't regret that you did that, because building a passive income through dividends is amazing. I mean, if all else fails, you know, you still have your dividends coming in and you can rely on that. You know, it's really good. Trust me. I did a video once where I showed that if someone were to spend $2,000 on a foldable phone, $2,000 are gone. He'll realize after that the foldable phone is just another Android phone. 5 years later, tops, he's not going to have it anymore. Probably going to throw it away or get another one or something like that. $2,000 wasted. But if you put $2,000 on a dividend paying ETF and a little more later on and so on, those dividends can buy you that foldable phone and you'll still have the money, right? So that's that. Diversify. Stay into dividend ETFs. Do not go into the single stock route. Let the years go by. Do the single stock route, guys, in a simulated paper trading. I know you're gonna see stocks that will have risen during that 1 year, and you're gonna say I missed out and so on. Look, that's okay. The stock market never ends at all, and there's always gonna be opportunities every single day, right? So don't worry about it. Just give yourself 1 year of simulated paper stock trading, and you'll learn from that. You'll make mistakes. At least you won't have lost money. Stay committed to the long-term portfolio strategy. It's the only guaranteed way that you can build wealth. I guarantee you. If you try to do the short-term, I guarantee you will never build wealth. You will never. You will always be excited and say, I bought this penny stock and I made $400 a day. Do it every day. Do it every week. Do it every month. Do it for the next 2 or 3 years. I guarantee you, you will go nowhere. Go back to the same point you started. Now, if you still want to buy individual stocks, right, and you want to say, well, Mike, okay, you're right. I like the ETF part. Fine, I'll build a diversified ETF portfolio of many nice paying dividend ETFs. But because they move slow, I want to buy some stocks also and so on. Be very careful. If you're going to get into the tech sector, which most of you will, because the tech sector seems to be the one that has the best growth opportunity, and it does on good times. When there are good times, the tech stocks will give you the highest returns. Here's one tip, and this is not mine. This is actually from Warren Buffett, right? And Warren Buffett once said that if you're dealing with the tech sector, and this is not applied universally for all sectors, but just for the tech sector, if you're dealing in the tech sector and you see a stock you like, but the PE ratio is 25 or higher, Warren Buffett said you're looking for trouble. You're going to see tech stocks that are trading at a way higher PE ratio of 25, right? The price to earnings ratio. They could be trading at 75, 65, 85, whatever, and they're still doing well. And you're going to think, well, Warren Buffett's wrong. No. In general, or most of the times, what Warren Buffett says is absolutely right. I have seen it. I've seen it through the years. Every time I saw a tech stock that was trading at 25 or higher, many times I avoided them just simply because of what Warren Buffett said. And guess what? Eventually, within the next 6 months, I was able to buy that stock at a much cheaper price. Guys, one of the biggest enemies for investors, new or not, is emotions. And you know it, but let's just remind ourselves. Emotions can kill an investor. If you don't have the strong stomach to handle a red portfolio, then you're going to make mistakes and you're going to sell at a loss. If you want to avoid the stress of seeing a red portfolio, if you want to avoid the possibilities of selling at a loss, you have to do certain things. 1, have patience, because the institutional investors, as Peter Lynch said, guaranteed, they will push stocks to abnormal highs and to abnormal lows. Peter Lynch said, though, that's not something to look at as a negative, but as a positive for retail investors, because it gives us a chance to maybe sell our stocks at abnormal highs, make good profits, or when they push stocks at abnormal lows, to buy a company that's now trading super cheap. Or if we were in it and it went to an abnormal low and we're red right now, we have the opportunity, if it's a great company still, and we reevaluate the whole thing and say, hey, you know what? It went too low for no reason or whatever. I still like this company. I can buy more shares of this company now at a lower price. Have patience. Have a strong stomach. They're going to go to abnormal highs. They're going to go to abnormal lows. Never use money that you actually needed in your life, because if you use money that you actually needed in your life and the stocks go red, you're going to sell at a loss. At the end of the day, you lost everything, right? So don't do that. If you use money that you don't need, even if that means it's just 20 bucks at the end of the month, hey, you're not going to stress. Right? You're not going to stress, but that doesn't mean you should gamble it either. So when do I start investing in the stock market? Well, choosing the right opportunity to get into the stock market will never work well for you, because guys, nobody can time the stock market, right? No matter what you see out there, and you're going to see many prophets, fake prophets telling you the market's going to go this with the money. Guys, stop. Don't listen to anybody. Don't listen to anybody. Stick to your strategy. Diversified ETF portfolio, diversified dividend ETF portfolio. Look for the long term. Add on a monthly basis. Build your wealth. Avoid the morons who are telling you that you should jump into every single penny stock there is out there. Stay patient, down or, whether you're down or up, whatever. Stay patient. From one year out the other year for whatever Wall Street screams at you or social media screams at you. So get into the stock market now. Get into the stock market whenever you can, but don't just jump in blindly into anything. Buy this book, The Intelligent Investor. In fact, in this book, if you buy it, there is one beautiful thing that every page is beautiful. You have so much things to learn from this book, guys. But there is one thing that this book says for accumulation into funds, ETFs, and so on. If an ETF you like ITOT that I love, and I've been accumulating this for years, guys, every single month I put into it. This book says that every single month you should have a strict amount of money that obviously you can handle, and say that every month I'm going to put that money into that ETF. But hey, wait, this month the stock is, that the fund has gone up this much. Maybe I should wait until it's low again so I can put in. Wrong. Now I buy with the set amount of money that I had already said that I can put into this every month. Well, guess what? This month I get less shares because it's gone up. Next month or 3 months or 6 months from now, it's gone down. I get more shares. That's the best way to actually do the accumulation. Not by trying to time when something is going to go low. It's never going to work out. Never going to work out, guys. And that's it, really. The secret to success in the stock market is not hard. We make it hard because we don't have patience. But if you're young, especially, guys, if you're young, you have an opportunity of a lifetime. The greatest opportunity of a lifetime for someone who is young in age and getting into the market is what's called dividends. And if you don't accumulate them while you're young, when you're 35, 38 years old, you're going to look back and say, wait a second, I'm 35, I'm 38, I'm still super young, and I could have been set up right now. I could have been set up, but I screwed my life up doing nothing, and I'm back, into a circle financially at least, right? So, I hope everyone does well, but another thing, don't chase to be a millionaire. Don't try to chase to be a millionaire. That's the stupidest thing in the world. Don't do that. That shouldn't be in your mind. Your mindset shouldn't be, I'm going to do this, I'm going to do that, I'm going to do that because I want to be a millionaire. That's the stupidest thing. Yeah, happiness doesn't come from being a millionaire. Happiness comes from, in my personal opinion, for me, here's my happiness. What makes me happy, right? That I got married to a beautiful wife, that I have kids, that I have created this wonderful, wonderful family, and financially I can take care of them and our bills and all that stuff. That's fine. That's fine. That's a blessing, right? So being a millionaire is stupid. Just chase the blessings, let's say, right? So with that being said, I don't know if I'm not going to, I guess, I hope that, I don't know, I'll end the video here. If you have any questions on anything about how to start trading or how to be successful or whatever, I can help you. I'm not going to guarantee anybody millions, but I can help you, right? Ask me questions and I'll help you. I also have a Discord if you want to join us. You don't have to. I will still answer your question whether you join or not. And if you want to join us, it's patreon.com/bullmarketwatch. Guys, I hope that you do well. I hope that if you're new to trading, especially, that you you have a wonderful journey, because investing is a wonderful journey. And that's it. Take care, everyone.